Well, welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, let's talk about what's going on in the metals market, but first and foremost, also talk about what's going on in the U.S. equity markets. The U.S. market still determines so much as to investor sentiment and where money is flowing, especially if it is either flowing in or out of the metals. Right now, the S&P, or at least yesterday, the S&P did turn around a little bit, but in no way has it dropped out of bed. But it did just slightly break that 2,800 level a couple days ago and reversed. What's the significance in your eyes of these U.S. markets still staying well, or hanging up there quite well when a lot of people are still waiting for it to roll over?
Yes, Corey. Well, the significance is that if we were in a bear market, the S&P would have, this sharp rally that it had, it would have petered out around resistance fairly noticeably. And when we're talking about resistance, the first real area was around 2650. And, we have the 200-day, we have the 400-day, which is at 2685. And then the 200-day is at 2750. I'm just rounding up a point. And the S&P, as we're speaking, is just a touch below 2,800, but the market was able to rally above those resistance levels pretty easily. And when we also look at the advanced decline line for the S&P 500, that is at a new all-time high. And the advanced decline line is an excellent leading indicator. So those two things, when you put that together, that tells us that more likely than not, the S&P 500 is probably going higher over the near term. And the significance of that for precious metals, which we've talked about for over a year, I believe, is the stronger the stock market is, the more likely it is that the Fed is going to hike rates. And that's obviously negative for precious metals, because this move that we had in precious metals over the last several months, the catalyst for that was the weakness in October in the sharp sell-off in the stock market. And remember, at the very beginning of January, the market at one point had priced in a 46% chance of a rate cut this year. Now, this strong rally doesn't necessarily mean that the Fed is going to hike. The market itself is at least going to price in much less of a chance that the Fed is going to cut rates. And so that obviously is negative for precious metals. And if you look at the gold to the S&P 500 ratio, this was looking very weak. And, I made this point in my weekend update a couple of days ago, not to give myself kudos or anything, but looking at that ratio, it was just not encouraging for precious metals. And coming back to what I said at the beginning of my answer, when you look at these things that the S&P just went right through resistance, and its advanced decline line is at a new all-time high. That's not good for precious metals. So I'm disappointed with the sell-off that we're seeing in precious metals, but it's not unexpected, given how strong the stock market has been.
Now, what about balancing out that advanced decline line for the U.S. stock market compared to the advanced decline line for gold and gold stocks? Because we even just chatted last week about how that advanced decline line for gold and gold stocks was looking quite encouraging. However, when you compare it to U.S. equity markets and that advanced decline line, as you just mentioned, it just hit new all-time highs for the S&P. So there's still a bit of a discrepancy here, hey? Even though people got excited about the metals and metals stocks, it wasn't even to the same degree as the U.S. equity market.
Yeah, the advanced decline line in the miners, if we remember back at the end of the year, it was actually showing a negative divergence, and, that did not play out. And in a very short-term sense, the advanced decline line, it was strengthening, it was confirming the move, but we didn't see any really strong positive divergence in the advanced decline line that was suggesting that, miners could get that much stronger. If we look at the percentage of stocks that close above the 200-day, I noted, I think last week, where we had 71% of the Huey closed above the 200-day, and 81% of GDXJ closed above the 200-day. I mean, those are really encouraging levels, and that's why it's going to be very interesting to see, can the miners, I think they're probably going to test their 200-day moving averages, but, those breadth readings argue that, that the miners should correct. I mean, if we do get a correction here, that the correction should be less severe than what we've seen over the last couple of years. But that being said, the advanced decline line for the S&P 500, that going to a new all-time high is, that's a strong positive divergence there. And so we don't have, with respect to the miners, while their breadth was gradually improving over the last several weeks, we didn't have anything in the advanced decline line that was showing like a real strong positive divergence and suggesting that they could, continue to move quite a bit higher. I think, to me, it's disappointing that we didn't see GDX and GDXJ get up to 25 GDX and 37.50 GDXJ. I mean, I was hoping that's where we would get to. And so we, unfortunately, it's really reminiscent of the past couple of years where this move petered out below those below the, certain resistance targets. And in addition to that, the miners had they had a bullish flag pattern, and the move also stopped and reversed course before they achieved that objective. And that's something, you don't see that a lot when you're making a bullish flag. And then you're breaking out, and it looks like the market is going to get up to the target, but that also didn't happen. So that was another negative thing for the miners.
So Jordan, can we say at least that this recent run, which has been about 5 months long, it is encouraging for the metals? It dug the metals out of what looked to be almost a breakdown position into some more bullish indicators, considering that advanced decline line and some of the overbought conditions we got in. But now that we're in a bit of a pullback that we have been waiting for, technically for a couple months, this all then, does it throw this overall bullish scenario into question, or is it now just all about where this pullback bottoms to see what kind of a then further move higher we can get?
Yeah, I mean, it's really tricky, Corey, because honestly, I don't know. Nobody else knows either. It much is going to depend on what happens with the S&P 500. I mean, can the S&P 500, if that rallies to a new high and that's sustained and we get a little bit more of a run, that's obviously going to pressure precious metals quite a bit. However, if we get a new high in the stock market, or it rallies up and makes a double top, or we get a false new high and economic data keeps coming in weaker and weaker, that's a scenario where precious metals should hold up better as far as the correction. So that's really what to look for. I mean, the question now is, we're likely seeing a correction, and where are they going to stabilize? Are they going to hold above the 200-day moving average? And when I mean they, I'm talking about the stocks, and gold mostly. Are again, the question is, are they going to hold above the 200-day moving average and do a bullish consolidation, or are they going to go even correct below that and give up most of the gains that we've seen? I honestly don't know. I'm encouraged by what's happened in the last several months, because we got stronger breadth readings than we had in the last couple of months, and also the miners have, in gold as well, they've pushed a good deal above the moving averages, so they have some room where they can fall and their technicals won't be damaged. But I mean, it honestly, Corey, it's a wait and see approach, and so much depends on the stock market and also the economy. But again, the stock market's a reflection of the economy. So tell me what's going to happen with the stock market, and I'll give you a better sense of what's going to happen with precious metals. The last thing I would just say, again, if the stock market can rally to a new high and then it can sustain that strength, that would be more negative for precious metals. But if the stock market rallies up, tests its high, rolls over, or makes a false high and then gets weak and rolls over, that would probably be the scenario where precious metals are holding up much better and they're looking like, they could go towards a real breakout later this year.
Okay, so still it just depends so much on what the U.S. markets does, but then also pay attention to where this pullback, if we are in a true pullback for the metals, where it stops out at. Just to clarify, that 200-day moving average sitting at 1251 right now, so there is some room on the downside, as you have said. What does that mean for precious metals investors now, Jordan? Is this a time to play the short side, or is it a time to focus on stocks that either hang up there or the strong stocks that have a little bit of a pullback and present another nice buying opportunity?
Yeah, it's really tricky. I mean, I would still focus more on the stocks that can move without having higher metals prices. I mean, I only own a couple things that are dependent on metals prices. Obviously, higher metals prices will help everything. But yeah, I would say with respect to the stocks, focus on quality. And also if there's something that you missed, and you're thinking back in the last couple months, I wish I would have bought that, keep that on your list, because those things will probably correct some. It's just, Corey, it's such a tricky situation here because we're going to see if this market, this correction could tell us, are we going to see a real chance at a breakout this year, or quite frankly not. So, it's really tough to say because, on the charts, we could be really close to a breakout as long as we hold most of these recent gains. But if we give most of these gains up and there's a lot of technical damage and, the stock market is doing well and the Fed says, we're still going to be paused and we're not thinking about cutting rates, that's a more difficult scenario for precious metals. So it's really tricky. Things are up in the air. I'm more encouraged than I was last year, but we'll just have to wait and see, and time will tell. And yeah, with respect to the stocks, I would say focus on quality now, focus on the things that can do well without higher metals prices, and look to see if some of those things that have done really well in that regard, if they come down to support levels, then you could accumulate those things on weakness rather than chasing them at these levels.
All right, Jordan, we're going to wrap it up there, but yeah, really the takeaway here is let's see where this correction brings us to and what the U.S. markets continue to do, because strength in the U.S. markets is going to put a cap on the metals, and it already has been, I think, from that recent run. But that recent run is encouraging. Now it just needs to hold some of those resistance levels that have turned now into, hopefully, support. Jordan, good chatting with you. Everybody click that link below. Go visit Jordan's site, The Daily Gold, for up-to-date technicals and up-to-date interviews that Jordan is giving. Jordan, thanks for taking some time today.